Good morning. I am born to be free. This is Mark Putrino, Scranton Mark today. And this is Mark Putrino's Trading Research. We welcome you and we hope that you find everything that you need here with us,
Yes, I'm Scranton, even though I've spent my whole life on Wall Street. So,
sir.
all right. Anyway, hope everyone's having a good day. I was thinking about inflation, okay, because there sort of seems to be a lot of it. But if we look at a lot of these commodity prices, they're down. Like a lot of the agricultural commodities, like wheat and sugar and so forth and so on. And but but there's inflation, right? I mean, you could just feel it anecdotally. So anyway, I was looking at this, and this is our United States wages. Okay, back to um, going back to well, let's see how far back this goes here. Let's see here. All right. I mean, I know it's kind of hard to see, but this goes back to 1964, and you notice how it's kind of steady. And
Yeah.
we're looking at a long time span here, so this is a bigger change than it seems. But all of a sudden, right around this has to have something to do with COVID, right? Because right here is the COVID crash, March of 20, right? And for some reason, the wage growth really just starts to accelerate. Now, this is a logarithmic chart here, so these are all equal by percentages. So this is where the inflation is coming from. It's wage inflation, and you're starting to see this like whenever one group goes on strike, another group goes on strike, they figure, all right, now is our time to go on strike. So you got the auto workers, you got I saw like Walgreens people were having a strike. It just seems like there's a lot of strikes popping up. So that's going to lead to these people getting paid more money, which is more wage. It's going to add more to wage growth. Now, the thing about wages is they're they're what we call sticky. It's hard for them to come down. Now, in a typical commodity, just say it's wheat, the price gets really high. What happens? The farmers grow more wheat and sell more wheat, and that pushes the price down. If the price gets really low, farmers stop growing as much, so there's less supply, and that causes the prices to go up. But wages are different because if you give someone a raise, it's really kind of hard to call them back into your office 6 months later and be like, "Hey, man, guess what? I'm cutting your pay." I mean, I suppose it's possible if it has to get done, but it's a much stickier thing. So when you hear people talk about wages are sticky, that's what they're referring to. All right, let's go see what else is going on here in our.
That's really bad too, Mark, because that's the kind of stuff that you don't ever have the ability. I mean, like you said, you can't make that go away. And I actually thought it started back here in about 16 when they started making this $15 an hour minimum wage necessary. And so then you saw it kind of come off of this line, and it's been going straight since then. But you're right, that's what started it. But now it's just going to be UPS, auto workers. I mean, who next? All the
Yeah,
government workers.
so think about this, right? Let's see what this wages are benchmarked using average hourly earnings.
There you go.
So if you went back to, I don't know, doesn't seem like that long ago, but let's say 2000, the average earnings were 13 whatever. Now they're more than twice that. So I guess this is the average, or the average hourly earnings is $29. But you don't see this ever, it's not going to go down. Well, I mean, I suppose at some point it will have to come down if things get bad enough, right?
The real bad thing is, man, as an 18-year-old kid has no chance. When you're coming straight out, if you ain't got nothing and you're starting and you're trying to get a house, you're trying to live, you might as well just go get a box and go stay behind your local grocery store and wait for them to throw stuff out so you can eat.
I think too that in a lot of ways, colleges it's become kind of obsolete in a lot of ways, unless you're going for like some kind of hardcore research, right? That's one thing. But if you're going to just become, say, a history major or an English major, it's like you could just read a bunch of history books and go on a bunch of, go see a bunch of places. It's like,
Yeah.
You don't necessarily have to like go off to college to study history. It's got so expensive, and like you know how much money I mean, I don't know about where you live, but where I live, like what a good mechanic can make. If you could find like an honest mechanic, I mean, they could do really well. It's like there should be more, more interest in the trades or being an electrician. I mean,
My
hey,
dad started as a mechanic.
dude, I got an electrician here, right? The dude raises horses. He lives on like this big place in Greenwich. And one day I was down by the beach in Greenwich and I see this guy on I don't know what it's called. He wasn't actually riding on the horse. He was riding on like a little wagon behind it, right? And it's like, oh my God, that's my friggin' that's my electrician. So it's like this dude's an electrician and he's making enough money that he can race horses.
Well, you
So
know why, Marcus? Because services are something that you never can do without. When your electricity goes out, you've got to find an electrician. You need a plumber. You have to have a plumber. So those are the things that are always just wonderful. And they've made the trades look like such an ugly thing for so long that people that do it, I mean, my God, I know my father-in-law was a plumber, and he would come and open up my septic tank and just stick his hands in it. And
yeah.
I'm like, what are you doing, man? He's like, are you kidding me? That's just straight money right there. I said, that's disgusting, Daryl. He's like, it doesn't matter. That's money. People won't do it. You won't do it. I said, no, I'm not sticking my hands in there. He's like, right. I'm like, oh my God. But you know what? He was a good plumber.
Well, it's kind of a funny story, but I got a cousin who's down in Queens, and he works for like some septic company, and all these people are calling up and complaining because on his truck he painted your shit is our bread and butter. so so he painted that on the side of the truck, and I guess a lot of people got offended, and pretty damn funny though, if you
That's
ask
good
me.
stuff. That's good stuff.
All right. Anyway, let's review our markets here because the last couple of days have been pretty ugly. Rebounding a little bit this morning. I just think that this inflate. Well, you know what? Let's before I go into that, let's take a look at our 10-year yield here. I think the fear is that because we've been cozying up to Iran, Israel might just feel like, listen, we got to take care of Iran ourselves because they back Hezbollah or Hamas. I mean, I get them all confused. But like, what are they going to do? This is either going to go on forever or they're just going to take them out. And let's not forget, like, there was that time period where there was the there was like some Iranian place where they were trying to build nukes. They totally hacked it and brought everything down.
Yeah, the
Um,
Stuxnet virus.
yeah, that's what it is. And then a bunch of
That was
the
really cool,
Iranian
man.
scientists got assassinated.
That
I mean,
was
it's
really
like,
cool how that worked. The
yeah,
Stuxnet
dude, it's
virus.
like real, it's like stuff out of like a movie. It's like,
Do you know what it would do? Is that you have to spin uranium at a certain degree to get the rods right for them to spin up the reactors. So what the Stuxnet did was it would spin them at a different speed, but then read the dials at a different speed. So it threw them off all the time, and it just destroyed everything. It's incredible, and it just grew and just climbed along. It's wild what they did with that thing.
yeah. So anyway, so my fear is if we wake up one morning and we find out, all right, Israel just attacked Iran, and I would not be surprised. But then that could really be negative for our markets, and that could really make oil skyrocket.
Well,
So
you didn't hear about the envoy to Iran, Mark, that they're investigating him for passing off state secrets?
I heard about it. It's just this whole administration, this whole cabinet. It's like one is dumber than the next. It's like Anthony, and then it's like,
I don't know if it's not. I think it's almost treasonous, my friend. I don't think you can have this many blunders and say it's just a faux pas. It's a mistake. We just keep making mistakes and we don't know how to fix them. Well, you know what? Obviously, it's planned.
I mean, this guy Jake Sullivan, right, just said like 3 weeks ago the Middle East is the most peaceful it's been in decades,
Yeah,
and now look what's going on over there now. And
yeah,
it's like, and this dude's supposed to be like an intelligence expert.
yeah.
So, anyway, all right. Anyway, let's just stick with the markets because it's too early in the week for me to get upset.
Sure.
All right. Anyway, here's our 10-year yield, right? 4.62. So it's off a little bit, and this is probably why we got a little bit of a bounce in the market, but that bounce is now over. So let's go back to start again with the S&P. So this is the SPY. This is an ETF that tracks the S&P 500. And this is the S&P 500 is the most important benchmark. Ironically enough, the most common one, if you watch the news, they talk about the Dow Jones. But in the institutional investment world, no one really looks at the Dow Jones. People look at the S&P because it has to do with the way they're constructed, right? The Dow Jones is what we call a price weighted index. So that means the higher the share price, the more influence that particular stock is going to have on the index. So you could have a company that's worth $1 million, and if it's trading at $100 a share, it's going to have more influence on the index than a company that's worth $1 billion that trades at $10 a share. The S&P 500 is market weighted or market capitalization weighted. So it has nothing to do with the share price. It has to do with how big the company is. So the biggest company is Apple, which is I think about 7 or 8%. And you think about it, of 500 stocks, you got one that's 7 or 8%, and Microsoft is about 7%. So you got two stocks that make up about 14% of a 500 company index. So it just shows you how important they are. But anyway, we got up to this former little peak here, and we rolled over, get a little bit of a bounce this morning, but it's pretty much, yeah. I mean, these are ugly days. These aren't really big percentage days moves down, but what it shows me is the tide has turned here, right? The blue team was in charge, or the Bulls are in charge. So it's like, to use our football analogy, like the blue team is, all right, so here's the Giants moving the ball down the field, and they get to the Bills 1 yard line, and then they choke, and then the Bills turn the ball around and start going the other way.
Twice.
So it looks to me like two big moves like this are probably the beginning of a new downtrend, even though we are up a little bit this morning. All right, I just want to take a look at Apple while we're talking about it. And this is a good thing to know about too here. If you like Apple, you got this AAPU, which is this Apple ETF, and it's designed to move by 1.5 times as much as Apple does. So in other words, if you think Apple's going to go up 10%, well, you should probably buy this because this is going to go up 15%. And then if you think Apple is going to go down, you could buy this ETF, which trades inversely to Apple on a 1-for-1 basis. So if Apple goes down 5%, this should be up 5%. So if you're not someone who trades options or futures, you be aware that there are ways to get exposure to the short side of the market without doing anything complex. You can just buy, oh, look at this. This is a new one.
Yeah.
Granite shares. Huh. They might, you know what? They probably saw this and they figured we should go do one of these, or we should do something like that. So these ones are around first. Let's see the Granite shares one here. So this is 1.75. So actually, this one looks like it's been around for a while. And I never even heard of it. So this came out in August of last year. But if you look, it only trades about 10,000 shares a day, which is not good for, that's not a lot of liquidity. But anyway, let's go check a look at Apple. Granite shares, I think they're here in Stanford. I think they were like a big, crypto thing. And now that crypto's really kind of out of favor.
Oh, they need education then.
Well, this whole crypto thing was, right from the beginning, I was very kind of skeptical of it because as someone who's a trader, I know that markets need regulation because people got to be confident that what they're seeing is right and they're not getting screwed over. So one of the big, I guess, selling points or the things that the crypto enthusiasts were giddy about was like, oh, there's no government regulation. So guess what? When you have no government regulation, you get to have things like FTX come along.
Scam just ran wild.
Yeah. So, but this is kind of an interesting move here. And if there's some decent follow through this morning, down 80 basis points. So Apple got up to this level, right? And there was resistance there before. Remember, we tend to run into resistance at former resistance levels because we have people who bought up here who regret their decision when it goes lower. So they say, all right, if this gets back up to my level, I'm going to try to get out. So you get remorseful buyers placing sell orders at the level that was resistance, makes it become resistance again. And this is what we could end up calling a reversal day, or in candlestick charting, this would be called a bearish engulfing pattern. In Western terminology, we would call this an outside reversal day. Sometimes trends change over a long period of time. Sometimes trends change over a couple days. Sometimes trends change in one day. In other words, the leadership changes from one team to the other. Like here, the leadership changed over the course of 3 or 4 days, right? So we went from the Bulls were in charge to the Bears were in charge. This could be the type of thing that tells us that there's a leadership change in one day. Because remember, the red candles, the top of the rectangle is the open and the bottom of the rectangle is the close. So if you were to look at this on Friday morning, you would have said, oh, it's going to be another up day. Apple closed at 180.71, and on this day it opened at 181.42. So you would have said, oh, there's going to be another up day. But what happened by the close? Well, the Bears came in and totally turned it around, and we ended up closing below the prior day's opening price. So in the short term, knowing where the previous day's opens and closes were is very important, because that's where the most volume trades. So this something like this is kind of significant. So we opened at a higher price than the close here, and we closed at a lower price than the open. So this could tell us that this trend is turned, and the red team or the Bears are about to take over. And yeah, so it's a trend that could have changed in one day. And as you can see, there's some pretty decent follow through this morning. So this is kind of surprising that the S&P. Let me just look at this again here. So the S&P is actually up 27 basis points, and Apple is down big. So that's a little unusual. So we got to see if we can find out where that strength is. All right. So Microsoft. Yeah, I mean this had a pretty ugly reversal day as well. That's coming back a little bit. All right. So let's see what's going on else here. Where is that strength coming from? Healthcare is up a little bit. And this can show us here too, right? What was support over here, turn into resistance over here. Got to know where these price levels are, man. It's just that simple. Look at where this sell-off ended. Here, the same level that was support back here. So if you're watching this trend lower and you're thinking, where should I step in to buy? Oh, I'm going to buy it. It's at 130. Well, you're just guessing. But if you look into the past and you say, okay, there was support around down here around 126.50, that means there's a good chance there's going to be support again, because we have people who sold back here who regret their decision when the price goes higher, and they tell themselves, if I can buy my shares back at the same price I sold them at, I'm going to. So if you have enough remorseful sellers from here placing buy orders over here, the level that was support becomes support again. So you use the levels to figure out when to get in and get out. If you're watching healthcare trend lower and you're thinking, hey, healthcare's trending lower, I like it, I want to buy it. Well, as long as it continues to trend lower, there's no need to buy it. You're just going to keep going lower and lower. You want to jump in when it stops going lower, obviously. So if you said to yourself, you know what, I'm just going to watch this thing trend lower, and then I think if it gets down to around here, that's where I'm going to step in and buy, because there's a good chance that there's going to be support there. And as it turns out, there was. And if you can look on the upside here too, right? Resistance. We get resistance at former resistance levels. So if you buy something and it's going up and you're wondering, where should I have my sell target? Well, if you see a former resistance level, or we're getting close to a former peak, there's a good chance that there's going to be resistance there again. And that would be the place to put your order. So people that just pick numbers out of the air are really just guessing. People that look at the and just see where the important turns might take place, are just going to do better. It's just that simple. All right.
Man, Nvidia's down $14 this morning, 14.50 or 14.84 now. Sorry.
Wonder why. Let's see. Well, it's only down 5. But anyway, let's see why.
Huh. Wonder what mine shows that.
What is your show?
negative 0.84, 14.84, and down 3.16%.
Really?
Yeah.
Huh. Well, maybe this is delayed.
No, I got the same price showing on my screen. It's just showing me different on my list. Then I guess I'm looking at my totals that it shows me.
All right.
Maybe I need to refresh.
Well, this is a pretty nasty reversal here too, right?
Yeah.
See, the blue team's in charge, and all of a sudden, it's like the red team takes over. So, when we talk about these patterns, like reversal patterns, are things that show up that are illustrations of the price action. So, if there's price action that's indicative of, all right, well, it looks like things are turning, like something like this, you could say, all right, well, this is some kind of a pattern. Now, I don't know what it is, but probably in the candlestick world, this is probably called something. I don't know what, but it's just, you don't really need to memorize the pattern. You just need to look at it and say, huh, the blue team was in charge, and now all of a sudden it looks like the red team has really pushed things back the other way. And then we can look down here and we can see how a clear example of how what was what was resistance turned into clear support. So 406.50 was clear support here in June, in August, and in September. I mean, you don't need to be a market guru to see that. Now, this support level over here, it looks like it's, let me make it a little bigger here. So support here became resistance here. But now I would say it looks like it's kind of been negated. So I'm not going to take this line off my chart. I'm just going to make it a little bit smaller because it could become important again. That's the 445 level. But I don't think it's a level that's important doesn't stay important forever. Sometimes their importance diminishes or gets negated. All right, so let's go look at our financial sector here. And we can see this here too, right? So this is where our strength is coming from. This is up 48 basis points. But we can see here too, this resistance level turned into support. Now just think about this. I know hindsight's 2020, but you say, all right, I like financials. It just broke the support. Where do I want to buy? Oh, look at that. 33.60 was a resistance level. That means there's going to be some good chance there's going to be support there. So you buy it here, then it starts going up your way. Then you say to yourself, oh, where do I want to sell this? Oh, look at that. 34.70 was a support level, so there's a good chance there's going to be resistance. And you would have sold right there. So the person who guesses, who just pulls the price out of the air and says, all right, I bought it at 33.50, I'm going to sell it at 35.50 if it goes up $2. Well, you guess what? You're going to miss out because you didn't let the market tell you what to do. You just pulled the number out of the air. So that's our financials, and we're really kicking off earnings season. I've been a lot of what I'm hearing in a lot of research I've been doing, saying that consumers are really starting to get hit hard. I think last month was like the highest amount of credit card defaults ever.
Yeah. And the highest amount of credit card debt. It was like over 1 trillion on credit cards each month for the last 2 or 3 months.
Yeah, and there's been a really high levels of people defaulting on their auto loans.
Yeah. Yeah, I saw a video on some CarMax car lots. Man, they are packed full, and the problem is that they've got so much money in these used cars that the new cars are selling cheaper now, and they can't get the money out of them. So that's why AutoNation and CarMax were getting beat up so bad for a while.
Yeah, I almost defaulted on my truck loan one time by accident because I forgot to pay my bill, and then one day I get a certified letter. It's like, we're coming to repossess your truck. So I just completely forgot. I don't know. I don't know why. I like to actually pay my bills. I don't like to have the auto, the auto draw or whatever, where they just pull it out of your account. But fortunately, they did not repossess my truck, and I still own it.
Excellent.
The whole reason
Yeah,
why I got a truck is because I like to drive around in the snow. And last winter, we didn't really even snow at all. And they're saying that this winter is going to be mild as well. All
guys,
right.
we now have a Facebook group. It's Mark Putrino's Trading School. You can find us on Facebook, and we
And
live
I'm
stream there
getting
as well.
and we're upgrading all our technology on Thursday morning. So hopefully There won't be any more glitches or anything like that afterwards. But so that means we're not. They're supposed to come Thursday morning between 8 and 11. So let's just say we're not gonna be here. But that'll be good to get that done. But anyway, let's go look at XLY. Now look at where this found its support level that had been resistance. Where I was a resistance. Oh, it had been support. Why was it support? Oh, it had been resistance. Right? Resistance turns into support. Support turns into resistance. For whatever reason, this particular market or this particular ETF likes this $157 level, which I think that's what that is there. Yeah. Now, why is it not 156.80 or one whatever? I don't know. It's just that's where it turns, man. It's just how it happens. Sometimes we know, sometimes we don't know. We don't need to know though.
The key is to stay flexible and profit off of it.
Yeah, like why does this like 157? I could say, all right, well, it's resistance here because it was support there, and it was support there because it was resistance there. But why did this original resistance form back here? Why is this where the sellers decided to come into the market? That I don't know, but we don't need to know. But once that first vested interest formed at that price level, that made it a price level that was important. And as you can see, support turned into resistance. There's a little interesting pattern here. This is called, I think, what do they call it? The floating island or something like that. It's where you gap up and then you gap back down and you reverse right away.
Yeah, I think that's what it's called.
The floating island. So this is our consumer discretionary sector. Now, to me, this looks a little bit weak because what I'm looking at is the lower highs here. Notice how this peak formed at a lower level than this one. This peak formed at a lower level than this one. And a lot of times when you get these lower highs leading up to support, the support tends to break. So this looks a little on the weak side, if you ask me. Let's go back to our tech sector here. Yeah, so tech looks like it's made a turn. There's something that traders refer to as action, which is not really something that's quantifiable. But when you go down to 1.4%, and then the next day there's very, very little rebound, it shows that even though we've made this big move lower, there still aren't a lot of buyers coming into the market.
Avi, hope everything's okay with you, our friend.
Yeah, man. Shalom. Thoughts about Target? What, this Target the stock?
Yeah.
Let's see. TGT.
Avi, I don't know if you missed it or Hamed if you missed it, but we now have a Facebook group, Mark Putrino's Trading School, and you can find us there and follow it as well.
All right, so let's just look at Target a little bit here. I mean, my thought is it's probably going to keep going lower, frankly. I mean, it has a little bit of a turn, but just given the environment with higher interest rates, with what we just mentioned, record credit card debt, student loans now got to start to be paid back. So I think that's probably going to have a negative impact here. But notice how this price level here, which we would call this, we're going to call it 90, I don't know, just 90.50, I guess. Back in my day, that was called a half. But notice how it was resistance back in September of 18, and then it became support in March of 20. So this is the COVID low. So that's an important low. So my thought would be that if this gets down to around here, that's where I would start to look at it for a bounce. I mean, we've had a little bit of a turn here, but like I said, I mean, with interest rates moving higher, consumers supposedly are kind of, really starting to feel it now. I would not buy this here. I would wait for it to get down to around here. Yeah. That's where I think it bounces. We can look at our retailer ETF. This is the retail industry.
Dollar General is looking well.
Oh yeah, let's look at that. Dollar General. Haven't looked at that in a while. Sometimes you go through these stocks every day, they just become like, your brain just kind of gets like mush. Now, this is an interesting thing here too, and this is something that we need to pay attention to as traders. So we were looking at this as a potential buy because we had this huge sell off, and we got to this important bottom around 125. So this was our COVID low. This is psychological level, but we said we're not going to take a position unless it gets back. We were talking about this here, right, when we got to this support. So you don't just buy something because it's down and oversold. I think it makes more sense to wait for a reversal to actually start. And I just had a big move on Friday.
Well, they brought back the CEO that retired.
Oh, really?
Yeah, the one that before they put the pop shelf stuff in. I'm telling you, the pop shelf is what's killed Dollar General. They can't sell that stuff, and it's been sitting there. So anyway, bringing him back has got a nice pop, and that's definitely an island.
What are you talking about, dude? A pop shelf? What's that?
In the Dollar Generals, like they have these super Dollar Generals, and they tried to make them like a Walmart. So they put a bunch of these home goods type stuff in there, and then they squeeze the aisles together. So now you can't get but one person down an aisle, kind of like a Dollar General or a Dollar Tree. And then you've also got all this stuff for your home in there, which take up so probably a third of the store, but none of the stuff sells. And then they're always rearranging it around. And it's just a gigantic waste. And they had a really good product because people were coming there because it was cheap. You could get through the store. They didn't have a bunch of wasted space and extra stuff. And now they've kind of, I don't know, they got to fix their model.
Huh. Up around where Lila goes to school, there's like a Dollar General or Dollar Tree on pretty much every corner.
Yeah.
Well, they're not really corners, they're because there's like miles between them. But anyway, when we talked about this right around here, and we said, all right, what level does this need to get back above for us to have some conviction that the reversal has started? And the answer was right around here, because this was our closing price here, it was our closing price here. This particular level was important in the short term. So look at what happened. It never got above that, which means we never would have gotten into the trade. So we wouldn't have gotten run over. So this is why it's important sometimes to let reversals actually start before you go and buy. Another way you can look at a potential reversal is, all right, well, we were oversold and now the RSI is telling us that we're not oversold anymore. So if something is oversold, the first thing it's going to do before it turns around is become not oversold. Let's see, where's my line?
Yeah, and the nice thing about that is when you set these levels and it goes against you, you can always short it until it shows back up to make the move to go up again. So that's what I did. When it broke that level, I've been shorting Dollar General all the way down to 105 or 10, I think. Then I got out when it started to move again.
Yeah, let's look at this Direxon. Sean's got a question here. So these ETFs are pretty cool. I don't necessarily recommend Direxon. I mean, there's probably just as good as any other ones, but these are just the ones that are popular. But if you think a market's going to go down, you can buy a bear ETF, which is basically a fancy way of saying if it's a bear, it's going to be reverse of whatever it's based on. So in other words, if you think, yeah, there's also the pro shares. Like this is a common ETF for a popular inverse ETF here. This is a different family. This is pro shares as opposed to Direxon. But this is designed to move in the opposite direction of the S&P 500. So if you think the market's going to go down, see, look at that and then look at the S&P 500. If you think the market's going to go down, then, and you're not someone who trades options, then this is something good at. So here's our S&P, right? Notice how on Friday we were down 50 basis points. Now we go to the inverse ETF. On Friday, it was up 50 basis points. So there's that one. There's leverage. This Direxon really has a lot of different things you can look at here. I'll go to all ETFs here. So you got your inverse for particular stocks or your leverage for stocks. In other words, if you think Google's going to go up, you may want to consider buying this because it's going to go up by 50% more. If Google's going down, you may want to buy this because this is going to trade inverse to Google. Then you can go in here and they got all kinds of different things. You got your biotech, your retail. Some of them they're just bull. They don't have bears. I guess it's too hard for them to structure. But here we got our transportation bull, utilities bull. So let's see. So this is something to keep an eye on here, UTSL, because if interest rates for some reason roll over and come on in, then that's probably going to cause the utility sector to rally, and that's actually kind of what's happened. But that's something to keep an eye on there. So let's see what that UTSL. UTSL.
You got a question about MCO down here as well, Mark?
MCO. What's that?
Oh, I hadn't heard of that stock.
Moody's. What's going on here? I don't know. I mean, to me, this looks a little bit kind of neutralish. I would pay attention to this here, though. See, this is going to be our 325 level. And a lot of times we see support or resistance at nice round levels because people just think that way. No one says I'm going to buy it if it gets to 320, 320, 380. People say I'm going to buy it if it gets to 325. So we got this. So if we rally, I would be looking for resistance up around here, around 325. See how we got oversold here, and then once we got unoversold, that would have been a good time to buy. And I guess for a bottom, I don't really see anything in here that really stands out. So I would probably be looking down here. But to me, it looks kind of, well, I mean, if you're a trader, you got to just assume the trend is going to continue. But I don't think I would buy it here. I'd probably be waiting for it to get down and around here, which is down about another $10. But like I said, given the environment, we could easily get there. Interest rates start to go back up. Something over there in Israel goes out of control. I'm really worried, dude, because we've had these open borders for so long, and we've had all these people just walk right in, and there could be terrorist cells all over the country just waiting for something to happen. You know what I mean?
Yep.
I mean, I know 9/11 time ago, but these people are friggin', they're like demons. They're like evil.
Mark, I don't know if you remember when we were kids and in the 70s when they took Iran, when Iran took the embassy, they were preaching when, from like the early 80s, we would see these documentaries or CBS over in Iran trying to talk to them, and you'd hear them in the schools teaching death to America and death to the great Satan. And they were teaching these children as children to hate us. So when you do that, you indoctrinate that person to forever hate that person. And there's nothing you can change about that. There's nothing you can change once you create it.
Well, I believe that, right? I don't believe in like moral equivalency, right? There's this rabbi. I mean, I'm not of Jewish faith, but there's this show on I watch every now and then that's got this rabbi who talks about the Talmud and so forth and so on. And he was making some points where he says, there's no such thing as moral equivalency. And someone might say, well, you know what? Someone who supports Osama bin Laden might have thought 9/11 was a good thing, but only someone who's evil could think it's a good thing. So, because there's an absolute good and an absolute evil, I think, in the universe.
Absolutely.
So, yeah. So, like I was watching a show on Hitler yesterday on the History Channel, and it's like, yeah, if you could think that what he did was good, it's like you're an evil person, and I'm sure there were probably German people that spoke out against Hitler, but they probably got killed. So, but anyway, yeah. So it's a whole different ballgame. They don't look at things the same way that we do. So for them to come out and blow up a bus and kill a bunch of innocent people, it's not a. Your friend is coming to Israel on Wednesday. Which friend would that be?
Well,
Would that be Joe
Mark,
or
the guys that you don't like the most have already been there. That'd be Blinken and
oh
what's his
god,
name,
it's just such a disgrace that someone like
Biden.
Anthony Blinken gets their own plane, gets a driver, gets bodyguards.
Listen, do you know why, Avi? You know why he's coming, right? Because Corey Mills, the representative from Florida, just took a plane over there and took all the Americans. He saved 90 Americans over the weekend, and Biden refused to send airplane. So this congressman from Florida, not only did he go to Afghanistan and get him some, but he went over here and got him some in Israel too. Just shaming the Biden administration. Just one little dude, one dude.
Well, they would say the same thing about Americans using drones and killing civilians. Yeah, I wouldn't disagree with that.
No,
I
I
mean,
mean, listen, I think we really have to take a real evaluation of humanity with ourselves, and everybody needs to take a look in the mirror and decide if we want to take this 15 minutes that we are from the moment we're all on a clock right now. I mean, we've got all kinds of crazy people with weapons, and all kinds of sane people with weapons, and people we think are sane that could be crazy. They all got nuclear weapons, so we're all just a matter of a moment away. So the fact that it's still this together is kind of crazy at this point.
yeah. Well, you know, the Iraq War happened. I wasn't really for it, but I wasn't really against it. But then when I had kids, you got to start to say to yourself, is it how would you feel if your kid died like over there? Is it a noble cause? And it's like, is it like fighting the Nazis? Is it like fighting the ISIS or whatever? I don't know, man. It's pretty
Mark, my
messed up.
son is a Harrier mechanic, dude. He runs his shop. I mean, the matter of fact, I mean that's what they use in these situations is the Harriers. I'm not very happy at all, but my
Yeah.
son he volunteered for this, and I just like my wife and I volunteered for it, and my other son volunteered for it. We accept what responsibility we take. I'm not going to be happy, but I'm gonna tell you if my son comes back in a box and he looks at his watch, I'm scrapping with him right there.
Yeah. Well, probably would happen if he didn't have all his bodyguards with him. What's this? Rite Aid. RAD. Rite Aid. Rite Aid declares bankruptcy. Oh, I mean, look at the stock. You can tell by the stock that this shouldn't be a surprise. Walgreens not doing very well either, and CVS said they're closing a bunch of stores. I like the CVS chart here for showing this concept of market memory that we talk about, how these important levels can stay intact for so long. And then that's what we refer to as market memory. So we can see here, right? 7650 was resistance in December of 19 and January of 21, and then it became resistance again in August of 23. This 111 level was important back in 2015, and then it hit resistance again. So 7 years later, 83 was resistance for 2.5 years. So these things are it's like it's kind of hard to understand. Like if you didn't really look at a chart, it would be, and someone tried to explain it to you, I think it would be kind of hard to believe. But if you look at a chart, hey, it happens. It's like, it's clear. I mean, 83 was resistance for 2.5 years. How is it possible that the company had the same valuation for that long, and then all of a sudden we dropped off and we got down to 52? What really changed here? And the answer is investor perceptions. That's mostly what moves prices is perception and psychology. It's not the news. What's this? CVS Health Chief. Oh, taking a leave of absence due to family health reasons.
You're right, Mastermind, and it's really bad in the big cities. They've got everything behind glass, and even though you have to go get an employee to open up a window, they're saving money from the theft.
Yeah, dude. I mean, I live in a nice town, Stanford, and you go into CVS and they got a lot of stuff locked up. You go into Walgreens and they got a lot of stuff locked up. I guess they lock up whatever is most prone to be shoplifted. But yeah, I mean, prices are going up. There's no like when I was in college, I was a security guard and at Burlington Coat Factory, and they told us, hey, if someone steals something, let them go. Don't like tackle them or anything like that, because one, if you get hurt, you could sue the store. Two is if the person gets hurt, they could sue the store. So it's just not worth it. You know, it's like you're more of a deterrent. But if they, because they see you, they're a deterrent. But you know, it's like my cousin used to work at CVS, and the most expensive things they sell there are perfumes. And he said people would just come in, just take perfume, stick it in their pocket, and walk right out because they know that there wasn't going to be any ramifications. You're in New York City. Yeah, I worked in New York City for a long time, man. And taking my daughters down there to a concert next Friday night, which I'm not really looking forward to.
You going to
But
the Garden?
yeah, dude, it's get this. So it's Pitbull, um, Ricky Martin, and then my wife said Julio Iglesias, but it can't be him. Maybe it's his son. And
Yeah, probably no. Julio's dead, I believe.
yeah,
Probably Enrique Iglesias.
yeah, yeah, that's right.
Yeah, that's it.
So anyway, so I thought so. Pitbull is coming on first, and it's very regimented now. So he's going to be on from 7 to 8. Then the next act comes on at 8:30 to 9:30, and then the next act comes on at 10 and goes to 11. And then at 11, that's it. You got to shut the lights off because of the union rules. Um, so hopefully they'll just want to see Pitbull and leave after that. But
And union rules taking away the fun. No extended concerts anymore. No after parties. What the hell? Golly, man, these unions are killing us.
so anyway, you know, I was telling my wife, I'm like, come on, just don't bring it up. Maybe it'll just die and they'll forget about it. But they keep bringing it up. So
Oh,
anyway,
Mark, you shaving your head to be a pit bull?
no, I'm not going into the concert. I'm just bringing them down there, and then we're
Oh,
going to
you're just gonna hang out in the car? You gonna go
we'll,
find a place to hang
we'll have
out?
dinner or something. I
Oh,
don't know.
okay.
I don't know. I like it bothers me going down there because when I worked in New York City and I went to school in Greenwich Village at NYU, and you know, I never felt unsafe, man. I never. So I left Manhattan in 2005, and like I worked in Rockefeller Center. I was actually in the same building as Radio City Music Hall, and you know, I never felt unsafe. Then I went down there about 3 or 4 years ago, and I walked up Park Avenue, and there's all these little like homeless encampments everywhere. It's
It's
pretty
just
bad.
sad, man. It's just sad that the people in charge of the rest of us don't give a damn about us.
Yeah. All right. Well, if no one has any questions, I'm going to hit the road here, but I should be back tomorrow. Just remember, we're not going to be here Thursday because hopefully I'll be getting my stuff upgraded.
If you guys are on Facebook, please like and subscribe Mark Putrino's Trading School and share it with all your friends because we'd like to be able to provide you with a good quality content. And we're also working on a educational program that I think you're going to like. Once Mark gets his internet fixed this week, Monday we will launch it, and I hope you guys enjoy it.
Yeah, my
Thank you.
grandmother grew up in Williamsburg, Brooklyn. So I know that area well. But all right, everyone. I will see you all tomorrow morning. Have a nice day.
Thank you guys. Take it easy.